Pick your game. What you'll learn from this story. Different markets, different clocks, and why copying your neighbor's moves can empty your wallet. Told by storyteller Alex Rivas. Stay with me while I walk you through two ordinary Mondays that changed two ordinary lives. Monday morning, 6:30. Kevin rolls out of bed in the one-bedroom rental he swears is shrinking. He brews cheap coffee, opens his trading app, and high-fives himself for waking before the opening bell. Kevin's game is scalping quick pops in the first 30 minutes. If a stock is up 2%, he grabs it. If it drops 1%, he dumps it. By noon, he wants lunch money. By 3, he wants bragging rights. Last week, he made $300 and posted the screenshot on Instagram. That little red notification bubble lights up his brain more than the cash. Across town, around the same time, but moving slower, is Luisa. She leaves for the subway still chewing toast. On the train, she thumbs through the same app, but her eyes drift to a different button. She clicks the 5-year chart instead of the 1-minute chart. Luisa owns 3 boring exchange-traded funds and 1 rental duplex she bought with her sister. Her goal is college money for a nephew who is still learning long division. She thinks in seasons, not minutes. Kevin calls moves like that lazy money. Luisa smiles and calls Kevin's style rent money that forgot to pay rent. One Tuesday, the market opens ugly. Headlines scream about a chip shortage nobody saw coming. Stocks gap down 2% at 9:30. Kevin's pulse spikes. He clicks buy on a semiconductor stock, betting on a dead cat bounce. The stock drops another 3% in the next 15 minutes. His heart pounds louder than the coffee grinder. He panics, sells for a 5% loss, then curses himself while watching the same stock bounce green 3 minutes later. Fear flips to greed so fast he feels dizzy. Within an hour, he is chasing another ticker, doubling his size to make back the loss. By lunch, his account is down $800, and his confidence is cracked like a phone screen. At that exact hour, Luisa is in a budget meeting. She only checks prices at lunch, so the morning panic is background noise. When she finally looks, her ETFs are down $1. She shrugs, eats her yogurt, and reads the company's quarterly report that mentions supply chains normalizing late next year. She whispers that timeline still works for me and closes the app. She's seen this rodeo before. In 2013, a similar dip shaved $8,000 off her balance, yet 5 years later she was up 40. She lets Kevin text her memes about diamond hands, but she thinks months, not minutes. Wednesday, same week. The bounce Kevin prayed for finally shows up. Semiconductors rip 4% at the open. Kevin is thrilled. He buys twice his usual size, rides the wave, and cashes out with a selfie caption, "Market pays the bold." His account is positive again, but his stomach feels like he ate the spoon. He can't explain why making the money back feels worse than losing it in the first place. He starts wondering if every move has to be a cage fight or if there's calmer sport. Luisa notices her duplex neighbor replace the gutters without asking. She uses her lunch break to call a roofer for an estimate. Her 5-year plan includes a new roof, not a new car. The roofer says materials are up 30%. She sighs, opens a spreadsheet, and moves the roof replacement to year 3 instead of year 2. She tells her sister the timeline shifted. Nobody panics. Later that week, she still buys the same steady ETF slice because spreadsheets beat drama. 2 Fridays later, Kevin sees Luisa at the farmer's market. She's tasting peaches. He's nursing an iced espresso. He brags he cleared $2,000 in a week. She congratulates him, then asks what he pays in short-term taxes. He shrugs like taxes are a tomorrow problem. She jokes she loves long-term gains because Uncle Sam takes a smaller bite, and I still get dessert. Lingering awkwardness sits between them like a third wheel. Kevin finally asks how she stayed calm during that chip shortage day. She answers, "I pictured my nephew graduating in slow motion. A 10-second blip on a chart won't cancel college. Different movie, different runtime." Night falls. Kevin sits on his couch scrolling StockTwits. Every post screams about the next hot ticker. He feels like he's drinking from a fire hose and drowning. He remembers Luisa's calm voice, her slow-motion movie. Something clicks. He opens a notes app and writes a single line. What is my goal, and what calendar does that goal live on? He stares at the sentence, realizing he has the hardware but no software. Next morning, Kevin still scalps a few trades for fun, yet caps the size at money he can lose without flinching. Anything bigger now flows into a separate long-term account modeled after, well, Luisa. He renames the accounts on his phone. The small one is labeled rent, the bigger one, graduation. When the market opens choppy, he still feels adrenaline, but the new labels remind him he isn't forced to double up. The room finally feels bigger, or maybe he just breathes deeper. 6-month later tax season arrives. Luisa pays 15% on her gains. Kevin owes 32% on his short-term profits, but he smiles anyway because the long side of his book shows a smooth uphill curve. He sends Luisa a photo of 2 cups of coffee labeled rent and graduation. She texts back a thumbs up and a picture of new gutters still shiny. Both pictures tell the same quiet truth. Know what game you're playing and play only that game. Summary: Kevin learned the market is a buffet of games, not one single game. Comparing a sprinter to a marathoner ruins knees and accounts. Define your timeline, size it to your sleep, and ignore the roar of other tracks.